focus on auto components maker Motherson Sumi Wiring. They reported a strong performance in Q4. The company even saw their best quarterly and yearly performance for revenue and EBITDA. We have with us Mr. Mahender Chhabra, who is the CFO, as well as Mr. Anurag Gahlot, who is the CEO, who joins us on the show. Hi, Mahender and Anurag. Thanks a lot for joining in. Well, a good year it was for you all. If I look at Q4, the revenue growth is close to around 19%. And for the year, you grew by close to around 18%. For the coming year, can you keep up the momentum? Should we be working with high teens growth? And if yes, which segment is going to lead the growth?
Good morning, and thanks for taking us on CNBC. Just want to tell you, as you said, that PV has grown by, also grown by 2 digits in FI in year on year in Q4 and single digit for the whole year. And MSWIL has outperformed the market. So market is supposed to grow because all the customers has invested heavily into the creating a capacity. Our biggest customer, Maruti Suzuki, has also announced that they will grow. They will be building capacity to around 4 million from 2.3 million, including EVs, hybrid, and ICE. So they are going to build, this capacity next to 6 to 7 years. And Tata Motors also, you must have heard, these all information is in public domain that they have taken the Gujarat facility of Ford. They are acquiring a land in Tamil Nadu at Vellore. Mahindra, we have seen news in the market today. So market is going to be very interesting. And we showcase that there's going to be a very good growth in the future in the coming time. And in case of MSWIL, our growth is directly related to two things. There's one is the volume growth, and second is customers are choosing now feature-rich models or top of that line models. Hence, upgrade is happening, and thus this is more content of wiring harness in the car. And MSWIL always get benefit as cost of the sales are dependent on the models. So higher the model are selling, MSWIL sales goes high.
Right. So what kind of growth do you gun for in FY25?
I think, as you are seeing that market is already giving the numbers, we are very much aligned with those numbers and we are planning ourselves. So I think that numbers are already available in the market.
Could you, for our benefit of the viewers, reiterate those numbers which are already available in the market?
It is obviously it's a single digit number only, but as you must have seen our past performance, we are outperforming. So I believe that whatever the market is going to grow, we are going to grow more than that.
All right, we take that point on board. But will that also mean scope for margin improvement? I just wanted your thoughts on this one, Mr. Chhabra, because your margins have risen in the fourth quarter, but copper prices have also risen, input prices have increased. You've added a new facility, you have your own plans as well. Are you able to pass on these price hikes to the customers? Is there further scope for margin improvement from current levels?
Yeah, so as far as margins are concerned, we do see good EBITDA in the current quarter and also in the current full year compared to the corresponding previous period. And it is a result of the hard work put in by the teams and a lot of initiatives taken in the area of cost optimization, localizations, and operational efficiencies. As far as copper prices are concerned, we do have an arrangement with our customers where we pass on the fluctuations in the copper prices to our customers. Now, this passing on could be at a time lag. With some customers, it is at quarterly lag. With some customers, it is at a half-yearly lag. But that way, it doesn't impact our P&L as such. And coming to a question about the sustaining the margins, as an organization, we focus more on ROS, and we have a target of 40% upward ROS that we would like to deliver. And 23-24, we delivered a ROS of 48%, which was better than we delivered in FY23, which was about 44%. And we'll keep on working on the overall financial health of the organization and try and deliver better ROS from here.
Okay, ROC of 40%, that's the target. Give us some more details. How is the content per vehicle different? For EV and ICE, because you're well equipped to serve the EV industry, and that's what could help big growth going ahead as well. So give us a couple of numbers.
Okay, so in EV, you have to understand that there's one part of EV is obviously the engine room goes for the high voltage, but rather of the room area and all that remains to low voltage. As I was explaining the content of wiring harness grows obviously as people are choosing for feature-rich models. So the higher the a model is, the more of wiring harness content goes into that. In terms of EV, you will find that there are not so many models come. There are very one or two variants only, and they are loaded with all the features in the vehicle. So the higher the content is over there, wiring harness also selling according to that. So you will find in the engine room area for electric particularly, there are very heavy wires. There are different connector who can hold a high voltage amperage. So anyway, content goes high in that area as well. So for us, in case of wiring harness, compared to ICE to EV, it is going approximately in passenger vehicle 1.75 to 2.25 times the content goes high.
All right. Let's break your revenue growth up going forward. Now, you said that there are three ways in which the company grows. One, if your underlying clients grow, that's point number one. Secondly, is if you increase the clients that you have. And thirdly, you increase the content per vehicle of every client that you service, right? So going forward, could you give us a sense of where the delta is in all these factors? You've spoken about the underlying industry growth. Let's talk about how much more you will sell to every client, and let's talk about some more client additions as well.
See, there are, I just come to for the customers, for there are well-established customer in the market, in the PV, and there are few which are new coming in, and you must have seen that information in the public domain. In two-wheeler industry also, there are established customer and there are new generation customer. We are working with both. Established customer, we were already supplying, and for the new customers, yes, we are already at the development or the proto stage. Now, coming on to the growing of the business, as I said, that one is the volume growth. Second one is it's all depend on the customer of customers. Actually, if you see that in the passenger vehicle, also 50% of the share goes to now to SUV. So the market is shifting from the entry level vehicle to the SUV. And SUV and in SUV also you are seeing that there are feature rich models which are there. So as soon as there are more feature rich are there, wiring harness content goes high, and our sales is directly linked to that. So we have to see that in coming time how the new models or the new vehicles are going to launch, and which sort of feature and what are the customer are choosing the vehicle. That depends on all that. But we are engine agnostic company. We are ready with EV, hybrid, petrol, diesel, you name it, and we are there. So we are ready with we are very much aligned with the customer and ready to serve them.
All right, gentlemen, appreciate you joining in. Thanks a lot for giving us all those details. For the time being, the stock is more or less flattish, but you're promising good times ahead. So we'll track all of those numbers. Well, for the time being, though, we'll slip into a short break. When you come back, we'll focus on another management. Wonderla Holidays will be the stock that will be on our radar.